You're watching Swissquote's Themes Trading with Peter Rosenstreich, Head of Market Strategy. Peter, it's been a roller coaster month when it comes to markets. A lower oil price really driving volatility.
It does. The oil price has a strong connection to equity pricing as well as expectations for growth. So this very steep drop that we've seen Qatar fragment from OPEC. It means that there's going to be a lot of supply and not too much demand moving forward.
But really, it's not just excess in the oil markets that's driving volatility. There are other factors at play here.
Absolutely. Changing in central banks and changing interest rates having a really profound effect on expectations for the outlook for growth as well as equity pricing.
So fair to say markets are really prepared for slower economic growth.
It's starting to. One, we have the Fed coming up, which is a critical movement, a critical event, not only to hear what they have to say and possibly raising 25 basis points, but also their expectation for how many more hikes we're expecting in 2019.
And sentiment generally is risk averse?
It seems that, that's the direction it's going. We look at the U.S. yield curve as a barometer for both growth expectations and as well as risk sentiment. And we like to judge the short end of the curve versus the long end of the curve to see the difference. And what we're seeing after many years of a flat curve is that now the curve is starting to go inverse. So the short end of the curve is higher than the long end of the curve, which generally indicates that there'll be a recession at some point in the U.S.
So it sounds like 2019 is not going to be easy. What can we do, Peter?
Well, it's hard to sort of reposition yourself completely out of equities if you're a long equity player. But what we found is that sort of more advanced and socially conscious themes generally are outperforming the market.
Socially conscious, so you mean that they're really really shaping the future in terms of strategy?
Absolutely. People are saying that, number one, that companies with a social, what's called ESG or SRI backbone generally outperforms their competitors. It also has a saying that those companies with a corporate responsibility, a social responsibility input, but generally have a stickier stock price. So shareholders are going to stick by that company even when there are pullbacks.
But not just good PR, they're really living it.
It seems like it. This is going to be one of those key test years of this whole theory of socially responsibility investing. And we think it's going to hold up quite well. We have a few different themes: sustainable energy, which looks at solar power, wind, alternative ways to traditional oil. We also have food and water, which talks about resources that are non-renewable and a better way of pulling them out of the ground. And finally, social responsibility, which generally shows companies that have ingrained in their DNA this SRI, ESG.
So a broader group of companies as opposed to the niche ones you mentioned previously.
Absolutely. And what you can see by the green line is that social responsibility portfolio is significantly outperforming the benchmark, which is the Euro Stock 600, and we suspect that it will continue doing that.
And so in here, you've got some really good names, some top names, in fact, when I look at them. Give me some examples of why you've got them in this social responsibility certificate.
Sure. I mean, all of them are vetted pretty well. BMW has been bringing this idea of corporate responsibility to the whole value chain and is doing a good job instilling that in the way they source products, how they use products. Alphabet or Google has been challenged recently with some issues that came up on their corporate side, which really challenged their employee rights, and they really came out with flying colors, showing again that they're really standing behind this social responsibility theology.
I was really interested by Nestlé, actually, because Nestlé is a company quite rarely in the press for negative purposes, so seemingly doing quite well when it comes to what they live and breathe, and some many interesting products that they're across and projects that they're across. Take a look at this little report, Peter. Nestlé is the world's largest food company, and at over 150 years old, it's worth more than $250 billion. The focus more recently has been on revolutionizing how we consume coffee, child nutrition, and bottled water. In the last year alone, 253 factories achieved zero waste for disposal. Over 1,000 new products were launched to meet daily nutrition needs of children, and it created more than 40,000 job opportunities, traineeships, or apprenticeships.
formal jobs are a source of social integration. Someone who's got a job, has got a bank account, is integrated into society, is paying taxes, is consuming, is making projects for the future. So is a valuable member and player in the community.
Given Nestlé's size, 447 factories operating in 189 countries, employing around 339,000, it may be surprising to note that Nestlé is victim to very few negative claims. This year, the company was accused of conflicting nutritional advice, promoting sucrose-free infant formula in some countries while including it in similar products sold elsewhere. Overall, though, it's reputed to be a good company, even a great employer. Corporations take their social responsibility seriously. Peter, on an individual level, what are you doing?
Well, our family thinks globally but act locally. So we instituted a Vegetarian Wednesday. We think that food sustainability is a really important challenge looking ahead. And we think that by not eating meat, that's a good way of sort of promoting that.
Why Wednesday? No, I'm kidding. You inspire me. Thank you. You heard it. Alternative investments are the way forward. Social responsibility could be the ticket.